Welcome to Derisnap.com. In this video, you'll see how to use Delta Hedging for the strategies. Delta Hedging is a risk management strategy used in options trading to neutralize the directional risk. That is, risk from price movements in the underlying asset. The key idea is to offset changes in the option's value caused by changes in the underlying asset's price. Delta hedging is widely used by institutional traders, market makers, and advanced retail traders, especially in volatile markets like cryptocurrencies or equities. Delta changes as price of the underlying changes. Time to expiry reduces. Volatility changes. The main goal of delta hedging is to make your overall position delta neutral. So traders frequently rebalance their hedge to stay neutral. Delta hedging in Derisnap can be done in two ways. Strategies level delta hedging. Enabling delta hedging individually for each trading strategy, such as strangles, diagonals, and straddles, means that you are applying this risk management technique separately for each of these strategies. For instance, if you have both a strangle strategy and a straddle strategy, you would manage the risk for each of these strategies independently. Account level delta hedging. On the other hand, enabling account-level delta hedging means that you are applying this risk management technique to your entire account. Rather than managing the risk for each strategy individually, you are managing the risk for your entire portfolio of strategies. This could be advantageous if you have a diverse portfolio and want to manage your overall risk, rather than the risk associated with each individual strategy. In Derisnap, once you enable delta hedging for a strategy, like short straddle, short strangle, diagonal, the bot will automatically manage the delta of your position by buying or selling the underlying asset, like BTC futures. How it works. You enter a strategy, a short straddle on BTC. Bot checks the net delta of your position, based on all option legs. For example, if your total delta is plus 0.25, the bot will sell BTC futures to bring the net delta closer to zero based on the set parameters of delta range. Rebalancing on delta check frequency, the bot regularly checks if delta is drifting away from zero due to BTC price movement. If drift is big enough, the bot will adjust the hedge again, buy, sell more futures. First, go to straddles. Then select the expiry you wish to trade. After that, in Next tab, you need to confirm the strikes of calls and puts. Once that is done, on Next tab please set quantities you want to trade. After that, in Advanced Settings, you need to set stop loss and trailing for the strategy. After that, enable delta hedging for the strategy. Delta hedging involves balancing long and short positions in options and the underlying asset to offset the risk of price fluctuations. Delta measures the change in an option's price for a one change in the underlying asset's price. Call options have positive deltas, 0 to 1, while put options have negative deltas, -1 to 0. This toggle switch determines whether delta hedging is active for the account or strategy. When enabled, the system will automatically hedge positions against delta changes. If you want to change the delta hedging settings, just click the Edit button and update the settings as needed. Disable SL leg. Disable SL leg option controls whether delta hedging should continue after stop-loss hits on one side of your strategy. When enabled, delta hedging will stop working if stop-loss is hit on one leg. When disabled, delta hedging will continue for all legs, even if stop-loss is triggered on one of them. Delta check interval. This sets the frequency at which the system checks and adjusts the delta to maintain the hedge. For example, if set to 5 minutes, the system will check the delta every 5 minutes and adjust the hedge if necessary. Frequent checks help catch sudden market moves, ensuring timely hedging. A 5-minute interval means the system will reassess and potentially rebalance the hedge every 5 minutes to maintain the desired delta neutrality. Range. This determines the level at the delta that needs to be hedged. This specifies the acceptable range of delta deviation before triggering a hedge adjustment. Call options have positive deltas, 0 to 1, while put options have negative deltas, -1 to 0. For example, if you set the range to 0.001, the system will only adjust the hedge if delta goes above plus 0.001 or below minus 0.001. The system adjusts the hedge if the delta deviates by more than 0.001 from your positions. This prevents unnecessary trades for minor fluctuations. For example, if you have a positive delta position, the system would offset with a short position in the underlying asset. If you have a negative delta position, the system would offset with a long position in the underlying asset. Order type. This defines the type of order used for hedging adjustments. You can use market order, limit order for delta hedging. A market order executes immediately at the current market price, ensuring quick adjustments. For limit orders, orders will be placed at mid-value of current best ask and current best bid. If the best ask is 1,50,000 and best bid is 1,00,000, then the mid-value is 1,25,000, so limit order will be placed at 1,25,000. Hedge on loss option only. This setting ensures hedging to occur only when the position is in a loss. When enabled, delta hedging will only happen if the position is in a loss. If your option position is in profit, no hedging will be done, even if delta changes. Min loss for delta hedging. This defines how much loss must happen before delta hedging kicks in. If you set minimum loss for hedge to 20%, and your total position value is 100, a hedge will only occur after your losses reach to 20%. If your initial value is 100, and minimum loss for hedge, 20%, then delta hedge trigger point will be at 80. If your portfolio value drops to 80 or lower, the system will execute a hedge. This helps avoid frequent or unnecessary hedging during small fluctuations. Once you've selected delta hedging settings for your strategy, you can start the bot. After your option orders are filled, they will appear in the open positions. To track the delta and hedging actions, go to the Delta Hedging tab. This tab shows the total delta across all your current positions. If the current total delta exceeds the set threshold, the bot will place a hedging order going long if delta is negative, or short if delta is positive to neutralize the exposure. You can also enable account-level delta hedging for your strategies. To do this, go to Settings and click on Global Delta Hedging Bot. When enabled, delta hedging is applied to the entire account, and individual strategy-level delta hedging will be turned off. Next, you can configure delta check interval, how often the system checks delta values. Delta range, the acceptable range of total delta before it triggers a hedge. Order type, how the hedge orders are placed, example, market or limit. In this case, the total position delta reached minus 0.002. So the bot automatically bought 2 quantities of BTC USD as a hedge. Later closed the existing hedge to rebalance the position, as delta went below the set offset value. This helps maintain a neutral delta and reduces directional risk in your overall portfolio. Thank you.